So, dear student, welcome to RCM Online College. My name is CPS Steven. I'm going to take you through to demonstrate something to do with financial accounting, that is foundation level paper, that is paper number 1. So I'm going to take you through on how we can prepare bank reconciliation. Under bank reconciliation, we have two formats on how we can prepare. So today I'm going to take you through one of the format, the simplest way for you to be able to prepare bank reconciliation. I know you understand that in our banks, we have maybe some challenges whereby you find that there are errors that may lead to the cash book in the company is not lining with what the bank is giving us. So today we are going to see what the error or how the errors will be regulated or how we can correct those errors. So in this, I just welcome you to this session. This is RCM Online College. RCM Online College. Our contact is 07 15 525,000. So we are going to look at financial accounting. This is paper number 1, financial reporting paper, financial accounting, that is FA, a reporting paper, and we are going to look at under this topic of assets and accounting for assets and liabilities is where we find bank reconciliation. So topic is bank reconciliation. So I hope you enjoy the session. I hope you enjoy the session. So as I said earlier, that under bank reconciliation, we have two formats to prepare these statements. We have two formats to prepare this statement, and we are going to start with the first format. You know that you are expected to maybe come up with an updated cash book so that you can get the balance that will help you to start in preparation of bank reconciliation. So how do we come up with the updated cash book? What are we supposed to record on the debit side and on the credit side of the updated cash book? That is what I want us to see. And after which, we shall do one illustration to show how that one can apply. Therefore, let's look on how we prepare the updated cash book. That is the first thing that you come up with. So, as usual, we shall have a T account. We shall have a T account with the debit and the credit side. So this is a updated cash book. So this is our debit side, and this is our credit side. As you are aware, usually debit what comes in, and we credit what goes out. That is, we debit the receipts and we credit the payments. We credit the payments. So whatever that we have as our item of receipt, we shall place it or maybe enter on the debit side. And whatever that we have that is our payment, we shall credit on our updated cash book. So assume you are given an information, the information. So we are going to have that format. We are going to have that format. What do we start with? Obvious, the cash book will have the balance from the previous period or from the previous month. So we start with the balance that was brought forward, the balance brought down. So you place it on the debit side, the balance brought down. Then on the credit side, if there was any check that was dishonored, any bank charges, all those are credited because you find that those are just, so we have said bank charges, when we credit, then we have maybe something like dishonored check. Dishonored check, we shall also credit. Another thing that we should credit is any correction of undercharge. Any correction of undercharge. If there was an undercharge in any amount, we put it on the credit side. Correction of undercharge. So if you have done any correction on regard to undercharge, you should credit that amount. You should credit that amount. Then we have standing order. I think those are some of the items that should be credited as far as the updated cash book is concerned. What can we add on the debit side? Remember, if there is an overcharge, for example, there was an error of maybe transposition. You have to indicate that error or correction of that error on the debit side. That is to make sure that you cancel that error. So we have correction. Of maybe overcharge. For instance, I can illustrate this by the overcharge may arise in this circumstance. Overcharge. It may arise in this circumstance. Assume you are given a transaction with 1100 you are given a transaction which was expected to have maybe 1300. That is 1300. That transaction was expected to have 1300. But when you are recording, when you are putting your record, you just mess and transpose this to 3100. For this, you can see we have an overcharge. As far as this one is concerned. So the difference that we will get, the difference that is 3100 minus 1300. That difference that we shall get is what we shall put under our debit side to cancel this error, because that means there is a problem. There is a problem in that transaction. There is a problem in that transaction. So in this case, you have to put that so that you can update your cash book, And then from this, you can maybe get the total. Can maybe get the total. Let's get the total here and have your totals. So our total on the debit side, and we have our total on the credit side. So in this case, you find that your debit side may be having a higher amount or higher value compared to the credit side. So you shall be having a balance on the credit. So you'll be having the balance carried down on the credit side. And this balance is the balance that we'll be using when preparing our bank statement. Let's now see how the format of preparing the bank statement. The format of how we can prepare the bank statement. So how we can prepare the bank statement, reconciliation statement. So in this case, we start with the balance. That was carried down, the balance as per the updated cash book. So you can have shillings. So the balance as per the updated cash book is what we start with. This is format number 1. I said that we have 2 formats to do this. So balance as per the updated cash book. So you just place your balance on the second column, and then you can add, usually add unpresented check. You add unpresented check. There are those checks that were not presented to the bank. There are those checks that were not presented to the bank, but were there in the office, unpresented checks. So unpresented check. Then we also add something to do with bank error. If there was any error, that may lead to increase in the bank balances, we add it here. So bank error. For instance, of this error, an example of this error, error that can lead to maybe increase in the bank balances. You can say maybe overstated deposit, bank errors, maybe overstated deposits. So that one we add. Then you can have understated payment. This will increase. Understated payment. Those are some of the error that you might come across, and then you sum them, you add to the last column, so that we can get that. Then you have to less. What do we less? We less uncredited check. Uncredited checks. There's uncredited checks. So under the uncredited check, you find that you're going to have maybe some checks that were not credited, together with the bank error. Still, we have bank errors. These are the error that reduces. It reduces the error that reduces the bank balance. These errors here increases the bank balance. You find that this one will increase the bank balance, but what we less is the error that reduces the bank balance. So for this error, you can say understated deposit. So that is an error that we should subtract. Understated deposit. Put it here. You can also have something to do with overstated payment. If they had overstate the payments, those are the error that you expect to get there. So for this one, you just add, you get the total, and then you subtract. You shall subtract. So the final figure, we shall call it. We shall call the final figure the balance as per the bank statement. The balance as per the bank statement. That is the final figure. It will be named as the balance as per the bank statement. The balance as per the bank statements. Therefore, with this knowledge, I would like us to look at an illustration, so that we can get to understand better. Allow me to share. I'm going to share. So here comes an illustration of the same. It's about bank reconciliation statement. So it says the following information relates to RCM Corporate. At that first 12/2017, the balance on the cash account was 11,820. You are told there it's debit, but the balance appearing on the bank statement was 15,000. That is credit. The following are the reasons for the differences. A payment of Kenya shilling 1,200 had been entered in the cash account as a Kenya shilling 2,100. Additional information number 2, we have bank charges of Kenya shilling 20. We had a bank charge of 20 shillings. Then a check of 200 shillings had been dishonored. There was unpresented checks totaling 6,500. We had uncredited check of 4,000, which had not appeared in the bank statement. You are required to prepare the correct balance on the cash book account. That is the updated cash book. And then B, you are required to prepare bank reconciliation statement. So that is the question. So let's tackle that question. So just say illustration. Illustration 1. So for illustration 1, we have adjusted or updated cash book. We start with the updated cash book as our first thing. So we have credit, we have debit. So we are given the balance. We are given the balance there. You can see the balance. We are given the balance. We are given the balance. The balance brought down. The balance brought down. Balance that was brought down. Brought down. We can see we are given 11,820. 11,820. 11,820. That is the balance that was brought down. 820. That is the balance that was brought down. Then you are given some bank charges. Bank charges. We said that we credit the charges. What goes out? Bank charges. Bank charges. This one goes out. It's a charge of 20. Then you can see we have been given we are told that there was a problem. There was a problem of an error of transposition. This transposition error from 1,200 to 2,100. So the difference is what we will call correction of overcharge. So you can do that. We have 2,100. You get the difference minus 1,200. You get correction overcharge. Correction overcharge. Can you say overcharge? Overcharge. Overcharge. That will be 900. 900. How do we get? How did we get to this? It is 2,100 minus 1,200, so that we can get the amount that it was overcharged with. The amount that it was overcharged with. I can see we also have dishonored check. We have dishonored check. These dishonored. Dishonored check. Still, this one will be credited, and the amount is 200. 200. 200. 200. Do you have any other item that affect our cash book? I don't think we have any other. If we could, we could have standing order, we could have credited. We could have credited. We could have credited. If we could have maybe anything to do with undercharge, the correction of any undercharge, you also put on the credit side. Put on the credit side. So let's balance our account. Let's balance our account and see what we shall get. What we shall get. So I think here I shall have my totals. I shall have my totals. So that is 11,820 plus 900. 11,820 plus 900. 11,820 plus 900. I'm getting 12,720. So that is the total. 12,720. 12,720. So with that, I think I can get my balance carried down. I can get my balance carried down. Of course, on the credit side, balance that was carried down. The balance carried down. I just subtract 220 from the answer. Minus 220. I'm getting something to do with 12,500. 12,500. 12,500. So this is the balance that I will start with when preparing my my statement of financial position, or my statement of financial position. My reconciliation statement, reconciliation statement. So let's prepare our reconciliation statement, our bank reconciliation statement. Let's prepare bank. This is RCM College. RCM College. This is a statement of RCM College. Yeah? So bank reconciliation statement. Bank reconciliation statement. As at 31st December 2017. So that is our heading. So we said that we start with the balance that was carried down in our updated cash book. So balance as per adjusted cash book. So here you have shillings. I don't know whether shillings. Okay. So you can have your shillings here. At least this is a cash book and shillings. So the balance we have 12,500. 12,500. 12,500. 12,500. 12,500. Hope it's visible. Then you have to add any unpresented. Add unpresented check. Unpresented check. So in our case, you can see from the question that we had unpresented check of 6,500, 6,500. So we have 6,500. So if that is the case, we did not have any error. If we could have a bank error, we could have maybe added here. But in this case, we don't have. So therefore, you just sum up this, you get 6,500. 6,500. When you add the two, I think this one will give me, this is 0, 5 to 0. It's giving me something to do with 19,000. 19,000. I'm getting 19,000, and then I have to continue. Lessing any uncredited check. Was there any uncredited check? Less uncredited check. Uncredited check. You can look at the question. You can see we are given one there. We had 4,000, amounted to 4,000. So this is uncredited check of 4,000. Still, if we had a bank error that this increases the bank balance, then we have bank error that maybe reduces the bank balance. It reduces the bank balance, So we don't have any. So in this case, we only have that uncredited check. So you sum it up, then you subtract from the given total of, I think I'm going to get 15,000. 15,000. This is what we are calling balance as per the bank statement. Bank statement. Balance as per the bank statement. So let's see. Let me display the question for you to see whether that was the balance as per the bank statement. Yes. Yes. You can see we have 15,000 is the balance that appeared in the bank statement. So after you do your question, your balance must be the same as what was there in the bank statement, because now you have corrected all the errors, you have corrected all the errors, and you have reconciled. You have reconciled. So that is what we are saying. That is what we call bank reconciliation. Bank reconciliation. So that is one of the method. That is one of the format of preparing a bank reconciliation statement. That is one of the format. There is another format of which we shall look at it in our next lesson. So remember, you're getting these services from RCM Online College, and to reach RCM Online College, kindly contact this number. 0719 525,000, 525,000. We charge each paper in foundation level, advanced, intermediate level, and advanced level at 4,000. At 4,000 for each subject. So thank you very much. I wish to meet you in our next class, when I will be explaining on how we can get the bank statement using format number 2. Thank you so much.